So quick recap, we were talking about acquisition of the asset. In that we saw that what are some of the concepts that we need to understand when we determine the cost of the asset. Then we looked at the usage. In usage, primarily we discussed two things. One is that how do you determine depreciation method and what those three depreciation methods are. Let me remind you once again that in practice there are many other methods as well, but their understanding would remain very close to what we have already discussed. So we looked at three methods and we tried to have a comparison across the three. And another pointer we looked in this stage was that if any of your assumptions change later on during the usage of the life, for example, your assumption about salvage value or usage, the useful life of the asset changes, then how do you record for that? Then we looked at the disposal of the asset. In that, what did we see? We simply saw that here, all we wanted to find out is that how much profit or loss you incurred or made on the disposal of the asset. And how did we do that? Pretty simple. We would already know how much cash or other consideration we got from disposing the asset off. If we subtract from that the closing book value on the date of disposal, that's what is going to give us profit or loss on disposal. This is where we were in the last class. And today we will discuss the last aspect or one more aspect of in this usage of the asset, wherein we will see that how do we record if we want to switch our method. So let us say if I want to move from SLM to WDV, then how do we do this? Or if we want to move from WDV to SLM or whichever method, how do we do that? That is what we are going to do first of all in today's class, and then we will move to new topic. But before that, as usual, any questions anywhere in whatever we have done already? Any issues, any questions, any confusions, feel free to let me know. All good, sab samajh mein aa gaya hai? Life is sorted. Let's get started then. Let's get started with how do we record for change in the methods. Now, in the change of the method, we will see soon enough that there is a very there are two special jargons that I want you all to get introduced with. That is also one of the key takeaway when we are discussing change of the method rather than the change of the method themselves. Let me straight away introduce them and then I will explain what am I talking about. Basically, the two jargons that I want to demonstrate via this is, one jargon is called when you implement a change in a prospective manner, and when you implement a change in retrospective manner. So basically any change, basically if you had followed SLM so far and now you want to let us switch, says you want to switch to WDV. So this is a movement from our consistency concept, right? So yes, with me, consistency concept, what did it say? That whenever you take a route, whenever you take a managerial discretion, then year after year stick to that. And if you want to switch, give appropriate disclosures. So let us say we have given appropriate disclosures. This disclosures could be anything dependent upon what rules and regulations require. For example, one level of rules and regulation could be that make sure that auditor knows it and you have explained the reason for this change to the auditor. Or another thing would be that no, this is not sufficient. You also need to write it somewhere in some section in your annual report. Then maybe one more level of higher level of disclosure could be that write it somewhere in your annual report and also mention why have you changed it. Give us justification. That give justification to general public. Even a higher level of disclosure could be that give the disclosure, give the justification, and also give the comparative figure that what would have been situation if original method was followed and what is the situation when the new method is followed. So whatever be the disclosure level, I am assuming that that is followed. Now, after the disclosure level are followed, then you can implement the change itself in two manners. One is in a prospective manner and one is in a retrospective manner. Now, what do they stand for? Here, the retrospective word has its dictionary meaning. What is the dictionary meaning of the word retrospective? Anybody?
Thinking back, looking back.
Yeah, looking back.
Looking back, retrospective means looking at the past in hindsight. Okay. So basically, we want to implement the changes after looking at the past as well. That's what we will do in retrospective. And its converse would be prospective. That means wherever we are right now, then onward we will apply the new changes. So that's what we are going to do. In this particular manner, in prospective manner, we are going to apply the changes. Let us say you have an asset And let us say year 0, 1, 2, 3, 4, and so on. Let us say in year 1 you have used SLM, in year 2 you have used SLM, and in year 3 you want to use WDV. So prospective means that this year and this year just use the new method. That's it. Don't think too much. That's what prospective is. But retrospective means that first of all, bring yourself to that level where you would have been if you were using the new method since the beginning itself. That's what we are going to say. That is the implementation of retrospective manner. So let me demonstrate this by an example to elaborate what am I speaking right now. So to elaborate what am I speaking, let us take an example. Okay. So we will continue with our same example, same numbers that we have been using for some time now. Let us say I purchase a machinery and I have bought it for a cost of 22 lakhs. I have a salvage value estimate of 2 lakhs and I have years of estimated useful life of 4 years. Let us assume an appropriate, by the way, the reason should not be that you want to change the numbers or manipulate the numbers. I think what could be some of the valid reasons, we have already seen it in the last class. Let us say if the nature of the business or nature of the asset or the asset utilization itself changes such a way that you think that appropriate picture of the business will be shown if we use this method, WDV, rather than SLM. Then in that case, you can implement this change in prospective manner. How do you do this? And retrospective manner, how do you do this is what I'm going to demonstrate. So let us do prospective first of all. Prospective, as I said, what does it mean? That wherever you are from that point onward, just start providing the new method. That's it. So let's do this. First of all, we will see in those methods, in both of these, what we want to find out first of all is the closing book value just before we have changed the method. As we had wanted to do this in when we wanted to switch our estimate of salvage value or estimate of N, we had already seen even when you are disposing the asset of, what was one information we wanted? We wanted the information about the closing book value of the asset on the day we are going for a change or discarding of the asset. So let's do this here as well. So we want to find out that what is closing book value at the end of year 2. Let's find it out in years. Let's say year 1 is here, is year 2 is here, year 3 and year 4. And we are providing depreciation and we are maintaining our closing book value in this particular table. So if you were providing SLM depreciation, let's quickly calculate SLM depreciation. If you remember, it will come out to 5 lakhs, but I will calculate it right now. So your depreciation in SLM is going to be what? 22 minus 2 divided by 4. It's going to be 5 lakh rupees per year. So in the first year, you would provide depreciation of 5 lakhs. What will be your closing book value? Your closing book value would be left with 17 lakh rupees. You started with 22 and 5 is consumed in the first year. So you are left with 17 lakh worth of machinery. Let's say year 2 comes. Once again, you would have provided 5 lakh of depreciation. Then how much will you be left with? The closing book value from 17 this time you are reducing 5 more. So you are left with only 12 lakh. Now this is all that we wanted to know. How do you provide the prospective change? Very simple. As we were doing in case of change of SV or change of N, exactly in the same manner. That we want to find out new depreciation amount or rate on this date. So we will use this number as a new cost. Our salvage value remains as it is, which is 2 lakh rupees. And our new number of years is year 3 and year 4, that is 2 years. So our cost is 12 lakh rupees. Our salvage value is 2 and N is 2. Can we find our depreciation percentage in WDV method? That's all we want to do. So let us go ahead and quickly do this. So WDV percentage is 1 minus nth root of N is 2 here. So square root of SV by C, that is 2 by 12. Somebody just tell me what this percentage comes out to be.
0.59.
0.59. Let's round it off to 60%. Here I am doing rounding off, but in exam I will not allow you to round off, but it's okay. I can afford to, because my objective is to explain the concept. Your objective would be to also calculate the numbers. So just for simplicity, I'm rounding it off. Don't do it in the exam unless I tell you to do so, which I will not, by the way. Anyway, so depreciation. So 60% of 12 lakh needs to be provided in the third year. So let's provide depreciation in third year. So 60% of 12 lakhs comes out to be how much? 7,20,000. If you do it in decimals, then it will be somewhat lower or higher. Then after this, you are left with how much money? You are left with how much of closing book value in the year 3? You will be left with 4,80,000. So if you calculate the 60% of this, it will come to very close number, which is 2,80,000. As there is some rounding off, that is why you will find some differences, but it will be very close to 2,80,000. And that's it. So in prospective manner, you see that actually there was nothing new. It is exactly same as we have already discussed when we have made any change about N or SV. We have already seen this. Now the main purpose of this topic was to contrast this, that how you would implement any changes when you do it in retrospective manner. So before I move on, any questions up till here? Okay, let me quickly write the journal entry in the year 3. In year 3, what will be the journal entry? The journal entry will be depreciation expense debit by 7,20,000 and machinery credit or accumulated depreciation credit, whichever system you are following, 7,20,000. That will be the journal entry of depreciation in year 3. In year 4, what journal entry we would pass for depreciation? In year 4, we would pass the journal entry same, but the amount this time would be what? 2,80,000. Now let me contrast this system with what would have been the situation if we were implementing the changes in a retrospective manner. Okay, let me demonstrate it now. So as we are saying that conceptually speaking, we want to know what would have been our situation if we would have used the new method since the beginning itself. That means looking back. So basically what we want to do is, first of all, we want to change our depreciation as well as this closing value to that level where we would have been if we were using WDV since beginning itself. So let's do this. What would have been our depreciation percentage if we were using WDV since beginning itself? Our cost was 22, our N was 4, our SB was 2. Can we find depreciation percentage? Let's find depreciation percentage. That will be 1 minus 4th root of 2 by 22. Somebody tell me this percentage. So what depreciation we would have provided in the first year? We would have provided 45% of 22 lakh in the first year, which comes out to be how much? What, 9.9 something? Let me round it off. 10 lakh. 45% of 22 is what? 10 lakhs. Rounded off, of course. So 9.9. 9.9. Okay, sir. Rounded off. So I just rounded off so that numbers are looking simple, a little bit simpler to write. So I would have provided 10 lakh of depreciation in first year. What would have been my closing book value in the first year? My closing book value would have been 22 minus 10, that is 12 lakh rupees. One more year is passed. So in second year, how much depreciation we would have provided? We would have provided 45% into 12 lakh. Right? This should come out to be very close to 5,60,000. Is it 560? Quickly calculate.
5.4.
540.
Oh, 540. Now, how much money I would have been left with in the form of closing balance of the asset at the end of 2 years if I were using WDV since the beginning itself? I would be left with 6 lakh or 560. I don't know.
6 lakh.
660. Huh?
6.5. 8.
6 lakh.
6.6.
6 lakh 60,000. Now notice we are here. We wanted to be here as far as depreciation is concerned. And we are here. We wanted to be here as far as the book value of machinery is concerned. So when you are implementing a change in retrospective manner, even before providing any depreciation for this year, first of all, you need to bring yourself to that situation where you would have been if you were using WDV since the beginning itself. Let us say you have joined certain organization which is in a country where the accounting rules say the account on you. That they will say that if you want to change the method, okay, go ahead and do it, but do it retrospectively. Now you will wonder, record this is what I'm going to show you. Ye samajh mein aa gaya? Why are we doing this?
We lost
Sir,
you.
we lost you for like 30 seconds or so.
Repeat. What I'm saying here is that there is no guarantee that you will be in X kind of a country or in Y kind of accounting rules. We don't know what sort of country you will join. Basically, depending upon rules and regulations of different accounting systems, they may ask you to incorporate any changes either in prospective manner or in retrospective manner. The objective of what we are talking about right now is that whenever they mention that, okay, do the changes but do it in prospectively, or if they say instead that do the changes retrospectively, what are they talking about is what I'm trying to demonstrate by this example. So whenever they say that do it retrospectively means that show the situation where you would have been if you were using the new method since the beginning itself. Beginning of what? Beginning of wherever you took this call. Where did you take this call to use SLM? You would have taken it in the year 0. And because of this call, what all have changed? Two things have changed. Depreciation amounts have changed and closing book value has changed. So now we need to bring them to that level where you would have been if you were using WDV since the beginning itself. So let us do that now. So as far as depreciation is concerned, if we were using WDV, how much total of depreciation we would have given? 10 plus 5.4, total 15.4 of depreciation. But how much have we actually given? Only 10. We have given only 10 of depreciation, but we would have given 15.4 if we were following the new method. So provide this depreciation right now. So in year 3, the first journal entry that you are going to pass is give depreciation debit 5,40,000. What else is different? One more thing is different, that your asset value, which is showing right now 12 lakhs, should have been actually slightly less. How much less? It should have been only 6 lakh 60. So it should have been 5 lakh 40 lesser. So do this right now. So how do you reduce the asset? You credit it. So the journal entry would be depreciation debit machinery credit by 5 lakh 40,000. Now notice that this journal entry is simply needed only to bring yourself in the beginning of 3rd year to that position where you would have been if you were using WDV since the beginning. अभी इस साल का depreciation दिया भी नहीं है. This is not this year's depreciation. This is simply needed. So basically what we are saying here is, I'll zoom out a little bit, that this particular journal entry is simply made to bring yourself into that position where you would have been at the beginning of 3rd year, not at the end. Now you are in that position where you would have been if you were using WDV since the beginning itself. Now you can provide depreciation for this year. So there will be one more depreciation entry, that is 3B. Let's call it 3B. One more depreciation debit and machinery credit with the value of this year's depreciation. So how much will be this year's depreciation? On this 6 lakh 60, we will provide once again this 45% of depreciation. So let us provide this. It should come out to be very close to a number of 3 lakh. Is it? Check.
297.
Yeah, let's call it 3 lakh, just round off a little bit, only for giving the illustration. So we would provide a 3 lakh of depreciation in year 3. So we would be left with how much? We would be left with 3,60,000, and at the end we would provide 160 of depreciation in the last year, which would be about 45% of 360. So the journal entry in year 4 is going to be what? In year 4, the journal entry is going to be depreciation debit and machinery credit. In year 4, the amount is 1,60,000, and in year 3, the regular depreciation is 3 lakh, and a one-time additional depreciation is 4,50,000. What did we do here? Very simple. We said that any changes in rules or in exceptions to consistency concept can be implemented in two manners: prospective and retrospective. Prospective means that point onward, just go ahead and implement the new method. Retrospective means, first of all, bring yourself to that position where you would have been if you were using the new method since the beginning itself, and then implement the new method. Any questions?
So sir, right now we did from SLM to WDV, so we had to catch up to the depreciation. What
Good
if it was
question.
the other way around? I mean, if we don't have to catch up, then we'll increase the value of machinery again, and then
Yes, that's what we will do. Yes. Basically, what Shivangi is asking is very relevant question. So what she is asking is that here you were falling behind in providing depreciation. That you should have provided 1540 of depreciation, where you have given only 10 so far. She is asking, what if you are moving from WDV to SLM? That obviously it will happen that you would have already provided more depreciation than what you want to. Then what do you do? Basically, let us say here you are already using, let's say you were already using WDV, and now you want to switch to SLM. So you would have already provided 15,40,000 ka depreciation, and retrospective change says that no, provide only 10 lakh ka depreciation. Then what do we do? Do we write it back? Question समझ में आ गया सबको? What she is asking? Okay, so answer is pretty simple. Yes, that's exactly what we would do. We would reverse this entry. So basically the entry would be machinery credit, machinery debit and reversal of depreciation credit. Reversal of depreciation credit. Now where this depreciation would have gone, in which statement? Would it go in income statement or balance sheet? In the case 1, where we are shifting from SLM to WDV, in which statement will this number go? Income statement में जाएगा कि balance sheet में जाएगा ये number? Depreciation debit कहाँ जाएगा?
Income statement.
Income statement में this year's expense will be higher by 5,40,000. बाकी सब expense जब डाल रहे होगे, then there will be one more expense called additional depreciation. If you want, you can also call it additional depreciation to demarcate between this depreciation and this depreciation. Okay, so there will be one additional expense called additional depreciation, and it will be subtracted. Whereas if you are moving in a vice versa direction, then it will be machinery debit 5,40,000 and reversal of depreciation 5,40,000 credit. Now where will this number go? This will also end up in income statement, but this time this one is an income. So you will say that you are reverting a depreciation. So depreciation reversed or depreciation added back or whatever jargon you want to call, but it will be again in income statement. So in income statement, you have all the other income and expenses. Then there will be one add 5,40,000. Yeah, Nupur, go ahead.
So because we have two methods here, prospective and retrospective. So is there a way to choose between two? Because by the method, we can see that prospective is far easier if we have more number of useful lives. Because if half of the life is gone, then only we'll have to calculate for the other half.
Okay. Here, fortunately, because things are computerized, you don't need to be bothered about that which one is easier to compute. So the rationale would be that basically it will, most of the time, not most of the time, always it will be dependent upon what rules and regulations are prevalent. So if rules say that you can go ahead and pick on your own, then of course you are free. Sometimes the rules may say this. Sometimes the rules may say that, okay, provide it in a prospective manner. Or if they are silent, then most likely you will end up providing it in a prospective manner. But what was the objective of this was that by any chance, if they go and tell you that do it in retrospective, then you know how to do it. That's all. So for retrospective, they need to tell you, and then there you will not have any option but to do it retrospectively. Okay. Yeah. Any other questions? Jasmine, clear? Okay. Any other questions? Anybody else? Okay. So this completes our long-term assets section, and we will be moving to a new topic today.